where that wallet was created from, and so on. And you look at the data coming out of these companies, and for example, Chainalysis is one of the largest such companies, and they show that Pakistan is actually number 8 in the world in terms of crypto accounts and crypto activity. Asian Development Bank came out with a report this year showing that Pakistanis have invested $20 to $25 billion in crypto. This is not obviously this year, this is over the lifetime, so in the last 10, 12 years or so since crypto has been popular. And I mean, some of these news items we can take as with a bit of grain of salt, but certainly where there is smoke, there is fire, right? So Dawn came up with an article this year, very recently, the last week or so, saying that we have lost around 600 billion over the last 12 months to crypto. This is based on the investigation done with some of the exchange companies as well. So clearly just a blanket ban saying, no, you can't trade crypto at all, is not the best way to handle things. Maybe we can learn a bit from how regulation has moved in other parts of the world. And what I see them doing is you legalize it and you regulate it. So you come up with licenses for private companies like exchanges and brokers. Only licensed exchanges, licensed local exchanges should be able to trade crypto, and then you enforce using those exchanges. So maybe limit the number of coins that you can trade, or limit the amount of dollars you can send outside of Pakistan, and do all of that through those exchanges. So that might be a better way to handle these things with the local context. So open up for questions, discussions. Would rather this be more of a discussion than a presentation anyway. I trade internationally, so I'm less familiar with the local Pakistani regulatory context, especially. But of course, there has been a Pakistan Crypto Council that was set up recently. They are coming up with a regulatory authority called PVARA on a very similar lines to the UAE regulatory authority. That's what I hear. But that's more or less is not super transparent to me right now exactly what they're doing. But it seems to be moving in the right direction. But at least there is a regulatory authority.
It's still illegal, right?
Yeah, that's right. So it's still not legal tender according to State Bank.
Okay, so it was created as a payment mechanism platform, right? That's not what it is being used for. It's become an asset class because it is being traded, right? What are you trading? Trade all over the world, goods, services, financial services, whatever, you're trading goods or services. What are you trading here?
So you're trading cryptocurrency. So you're trading, so currency all over the world you trade. Currency always trades as a pair. You can trade PKR versus USD. You can trade GBP versus USD and so on. So all currencies trade as a pair. In this case, you're trading, for Bitcoin's case, for example, you're trading BTC versus USD. So BTC is a currency, it's a cryptocurrency, it's an online virtual cryptocurrency. You end up trading that versus dollars, for example, or versus pounds, or versus PKR. So you're trading that currency pair. I completely agree with you that it's the question is, what is the value? How do you come up with...
For every dollar, there has to be some reserve. For every currency, there is some reserve with the central bank, be it gold, whatever. So even currency that way, it's not just the paper, it has the value of whatever it is that you are. So in that context, whatever it was started for to what it is now is what I want to know what a trader's view is.
There is, so from a trading perspective, I don't care. Right? I'm a high frequency trader. I hold positions for a few seconds. So I really couldn't care less what the value of Bitcoin be even in a day from now, right? Let alone in a year from now. However, if you think about it purely from an economical perspective, the value is whatever the market decides. It's simply supply and demand. Supply is restricted because of the way the protocol is constructed. You can only have a total of 21 million coins. Demand is whatever people want. So, for example, China is building Bitcoin reserves because they think USD is going to be inflated, it's going to go down in value. There's only so much gold in the world that they can buy, so they're building reserves in digital currency as well. A bunch of other countries are doing the same as well, by the way, over the last year and a half or so. So demand is whatever the market decides, supply is limited, hence the price action. Now, whether the price should really be at $100,000 or whether it should be $1,000 per coin, that's a separate discussion. In the crypto world, in the traditional finance world, you have fundamental metrics for any company. Right? You're buying stocks, you can look at the balance sheets, you can look at the fundamentals of the company, you can come up with a fundamental value based on whatever price earnings, etc., etc. In crypto world, there is no such thing. In crypto world, there is no fundamental view at all. It's simply supply and demand. However, the people who swear by this, and I'm not one of them, people who swear by this can also do say, why does gold has the value that it has? Not much industrial use anyway, at least not nearly close to the value of gold itself. They think diamond is way prettier than gold. So value of gold is simply driven by the value that market thinks gold should have. No other reason whatsoever. And so they swear by, well, it's a way to have some reserves. And people think that digital currency reserves are getting way more important than they were 5 years ago.
May I?
Sorry, sir.
Would I be correct in saying that crypto is just another window in the casino economy and will have zero benefit or loss?
I completely agree with you.
Bread and butter issues.
I couldn't agree with you.
It shouldn't concern the people. Only the gamblers in the international market are concerned about crypto, and it doesn't concern me at all.
I completely agree with you. My only caveat would be, if we are living in a country where there are so many gamblers and they own $25 billion worth of crypto already, I would want our government to legalize it and make some tax revenue off of it. Because it's happening anyway, so it's something to think about.
What is the source of this information that there's 25 billion?
That was the Asian Development Bank report from earlier this year.
It's not documented. These are not official trades. Where do you get this?
So they mostly cite the chain analysis reports that I cited as well. Because when I explained earlier, so it's a distributed ledger. Every single transaction is on the ledger, and the ledger is distributed. Anybody can see it. What you see on those transactions are wallet IDs. So you can see which wallet received, bought or sold how many coins for any kind of a crypto coin. And then they connect different wallets to different regions. So where was the wallet created from, for example, or where is it operated from? It's still heuristic. So that's why I'm saying, even if it's not 25 billion, there is a lot of smoke. Well, there has to be some fire.
They say 40 million accounts from Pakistan. That
yeah,
seems incredible.
I've seen some very big numbers as well.
So 40 million.
I'm not sure.
Go around asking people, one in five has to have.
No, but it's one person can create hundreds of accounts, and that's what people I know who trade here, they do that as well. So but like I said, where there is smoke, there is fire, and there are definitely a huge number of active Pakistani traders. You can go and check yourself. You can go to Binance peer-to-peer platform, which is what most of Pakistani crypto guys have been using. And you can actually see thousands and thousands and thousands of Pakistanis active there today, right now, trading on Binance peer-to-peer.
Hi, how are you? Yeah. So separate from crypto, I actually live in Dubai, and with the moves that Vara has been making, one of the things that everyone talks about, be it on the golf course or out at a bar, whatever the case may be, is the blockchain and is tokenization. One of the largest property developers in Dubai is an Indian company by the name of Damac. They've started their own Pripco real estate company by the name of Pripco. you can go buy a 2-bedroom marina on the blockchain. And a lot of the thought process is simply it's removing a lot of the legal issues that people have had historically, right? By placing it there, and at least you know that the asset is secured, and then you can focus potentially on underwriting that specific opportunity. Can you take a couple of minutes and just kind of explain, your thoughts on that conceptual idea? And in a country like Pakistan, is that a potential lane in which a business owner, for example, if they wanted to sell 5% of the business, theoretically, could they place that security on the blockchain, and could that be a saleable asset that currently is not saleable?
Yeah, so that's a decent use case, I would say. And especially in the scenario where you're not buying or selling the whole property, but rather you have tokenized a 2-bedroom apartment into 100 different tokens, and you can buy 1/100th of a 2-bedroom apartment. So definitely use case that has gained at least somewhat of attraction, and I've definitely seen that in the UAE. There were talks in Pakistan as well on something very similar. I know the company who was having those talks with the regulator as well, they didn't get anywhere. The question becomes, is there an actual need for this to happen? When you're talking about land transfers or property transfers, you cannot completely make it decentralized. You probably don't want it to be completely decentralized. I would actually want a land department to be involved in the process of transfer. That gives me a lot more confidence as a buyer than saying, oh, let this be completely decentralized, no central third party in the middle. I just want to buy from you directly and put it on some distributed ledger so everybody can see it. Property and land transfer is probably one where buyers and sellers would both be more confident if there is an actual central intermediary in the middle. But I agree, and especially in terms of breaking a property down into smaller tokens, that's where it probably really comes on its own.
What about just pure cash flow? Meaning a laundromat company in Egypt or a chemical trading company in Saudi Arabia, actual cash.
Yeah, for sure. The use case is definitely there. That's what it's built for. I'm just making the case that not many people are really using crypto for that use case today. Initially, it was the case because the transaction costs, the transfer fees were still pretty high for chains like Bitcoin. Then there were other chains that came up like Ethereum. Then there were other tokens that came up which were L2 tokens built on top of Ethereum, which actually really reduced the friction and reduce the transaction costs for these transfers and the time it takes for these transfers as well, but still hasn't really caught on as much, other than the black market, where there are a bunch of transactions that are happening on crypto all the time. But for real world economy, that is part of the system, of course, but it's just not that big, not as big as people would expect it to be.
I've got a local question. I recently went to my mechanic. I had an issue with my car. I needed a part ordered, and my mechanic said he would order the part from Dubai. Being a fintech guy, I was very curious how he's going to transfer the money. And he told me he goes to Binance and he buys USDT and he transfers USDT to the mechanic in Dubai, and then he ships the part. Now, if you analyze how Binance is working, it's really a Havala system that's high-tech and efficient, and maybe you can trust it more, but nonetheless, it is a Havala system. Yeah. State Bank has sort of frowned upon crypto and has asked the banks not to work with crypto. However, CZ Zhao, who is the Binance founder, a very controversial individual, has been appointed as a strategic advisor to the Pakistan Crypto Council. How can we reconcile if Binance is halal or if it's haram as far as the government laws and regulations go? And by the way, I was investigating this number of 14 million, and it's pretty much nonsense. Binance has about 6 million active traders, and it's the largest platform in the country. It's still a big number.
Yeah. So yeah, I agree. 6 million is still a big number. The mechanic is doing absolutely the right thing as far as he's concerned, but of course it's illegal right now. He cannot buy USDT in Pakistan through legal means. It's not legal tender. But yes, completely agree, right? There is a use case for cross-border transfers. That's what the gentleman behind you was just arguing as well. It's a completely valid use case. less frictions, exchange rates are pretty decent, very fast, happens within minutes and doesn't take days. But yes, of course, it's all illegal right now. And so there clearly needs to be regulation, and that's what I was proposing as well on the last slide. Blanket ban does not work, clearly hasn't been working the last few years. It would make sense for the government, Pakistan Crypto Council or other entities involved to give licenses to some of these private entities who should be part of this chain, regulate those entities and handle the cash flow that way. I think I'm being asked the last question, sir.
How do we ensure that what happened with NFTs or non-fungible tokens, which were a fad for some time and then kind of disappeared, doesn't happen with crypto? I suppose it happens with most crypto, but not with the stable coins. And secondly, is there any move, or would you know of any coins that are that are originating from here? So if the argument is that you use, money is going out, so regulate it, right? The difference is that if it's the same as using cash. So it's like Pakistan using the USD. So one would feel comfortable if there are Pakistani companies that have come up with crypto, or it's a Pakistani-based crypto coin, in which case you can regulate it. Because otherwise, Pakistanis own real estate overseas, but it's not regulated by the FBR or any sort of by the Tehsildar, right? So the question becomes, what is the point of just regulating money that's going out from here and over there, unless you're actually doing your own coins here? Is there any move to do that? If you could just shed light on that.
So when I said regulated, that's exactly what I meant, that we can control how much goes out of the country. So China does that, for example. There are US-based ETFs, exchange traded funds, so S&P 500, so a fund based on S&P 500, which trades in China. So now Chinese locals are allowed to buy that S&P 500 fund in China. The issuer of that ETF is a regulated entity, regulated by Chinese foreign exchange control entity, and they make sure that they cannot send more than X dollars from that ETF out of China on a monthly basis. Once they have hit that limit, the price of that ETF skyrockets, so nobody buys anymore. So that's all control, right? So you control how much actually flows out of your country, and you control that by having these licensed entities, and you enforce the regulation through those. That's exactly what we should be doing, I think, here with crypto as well, through licensed exchanges and licensed crypto brokers, and earn the revenue on the proceeds, on capital gains and sales proceeds.
Excuse me. My question is, $20 to $25 billion cryptocurrency, around $10 to $15 billion freelancers income which is not coming to Pakistan, another $20 to $30 billion of remittances not coming to Pakistan. Isn't the current account deficit, which we all are facing every 3 years, isn't it a self-inflicted wound to Pakistan or not? It's not his fault, but somebody from us should go and tell Q Block.
I couldn't agree more. I couldn't agree more. Look, I'll give you an example. So I run this trading company. We trade crypto, which is part of our portfolio. We trade physical commodities. We trade a bunch of other things as well. And we trade in a lot of countries around the world. UAE is our head offices, but we trade in China, we trade in India, we trade in the US, Europe, Africa, DRC, because we buy a bunch of metal from there and so on. Every time we make a business case to go into a certain country, the first thing that we are thinking about is, okay, we're going to invest $50 million in this country, build offices, hire teams, and so on. How do we get it out? That's the first question. And with Pakistan, that's where everything stops. Because we don't know, nobody knows how to get it out. There is so much uncertainty in regulation. I'm not an economist, and this is not my topic, but as a business person, and I'm sure there are a bunch of you guys here who hear the same things as well, this is the first thing we all care about. Some regulatory certainty, some taxation certainty, some certainty on the foreign exchange controls, and we just don't see that in Pakistan, unfortunately. So yeah, this is obviously part of it. what is happening in the crypto world, but so much more on that. Thank you very much.